Okay, so here's our precious metals update. This is the Swing Trading with Cycles channel. Welcome. This is where we time the market without predicting the market. I don't think that's reliable. It's better to watch the price action, understand what is happening, and react to it, right? Use multiple time frame analysis to try to anticipate. Looking at lower time frames becomes something like a time machine almost. So it is October 25th. So we have Tuesday. It's Tuesday night. We have a full. So we have our first 2 days of trading in the week. That's always important because Tuesday lets you know if you're going to get a reversal, follow through, or some consolidation. So this is actually the Wednesday candle because we're recording this after gold, and this is gold here daily chart. Gold is open for the day. It's just an inside candle. Yesterday or today, Tuesday, was a big doji candle. We had a high at 1662 and a low at 1638, and really kind of closed very close to where we opened. And so you really want to look for a break of 1662 to get the party started, and you need to get above this level, this swing high here. And so again, this is day 21. Now it's possible that this is actually marking some kind of important low, and this is actually day 3 of a new cycle. We'll have to see. Again, the cycle count is less important than the price action. And what you can see right here from the price action, at least, is this is consolidation at the upper end of the range. Consolidation of what? Well, this move right here, right? Pretty clear, right? This was a big move up. It was a bullish outside candle, right? We dipped below this candle, and then we shot back up, and now we're consolidating. So, again, your approximate level will be that 1662 to break above there, and then we need to take out this swing high. Now, that said, this is a pretty vicious downtrend. That looks pretty ugly. So that's not super promising. So not the choice of thing I would be trading right now if I had a choice. And if you look at the weekly chart, this is where things are, a little bit murky in terms of the quote unquote count. So we had a really long, what looks like a really long cycle at 31 weeks. So starting here, going all the way here to 31 weeks. And then we had this really tepid bounce for 3 weeks. And then we rolled over and we made a new low on week 10. And then we bounced up, got all the way up to the 1729 level, and then rejected lower. But now we've got something of a double bottom, right? This refused to make a new low. This is actually a slightly higher low than this one. And the same way that we're consolidating on the upper end of the range on the daily, that same thing is happening on the weekly, albeit not as pronounced. Again, that's the multi-time frame analysis. What you'll also notice here, though, is that this yellow line is your 200-week moving average. So we're now well below it, right? We've been below it. We've closed below it a few weeks already. This is the 3rd week in a row, or I should say, we closed 2 weeks in a row below it. So this week of October 10th, and then this week that was a green week, that was reversal, still closed well below the 200-week moving average. The other thing is you have this bearish cross. This blue line is your 10-week moving average. So when a shorter-term moving average crosses below a longer-term moving average, that's just another way of confirming you've had a downtrend for a really long time. It's kind of a meaningless thing in the sense that it's a really, really late signal. You've been in a downtrend for a really long time at that point, so you shouldn't be waiting for that. But it's also not a super bullish signal. And so this is potentially week 14, let's say, and this is week 10. So we could be setting up for some more downside. Again, don't focus so much on the weekly count or on the count. What I'll say is this is consolidation on the upper end of this range. But think about this in the broader context, right? I hope I'm not confusing you. But this whole thing, these 2 weeks, are consolidation on this, right? We had this rejection and this push down. Now that could change, but so far, notice this is consolidating on this lower end of the range. But we're at least staying up here, or we're not closer to here. Which takes us to the monthly chart, which is really all that matters, that longer term trend. You want to have the wind at your back, not at your face. We're following the 8-year cycle, and you can quibble about whether it's 8 years or 7 years or whatever. We know that there's some long-term pattern of higher highs and higher lows, and you can see that clearly illustrated here. An 8-year cycle would be 96 months. A 7-year cycle would be 84. And so This cycle was 86 months. The one that just end, the one that, so the cycle that we're in now started on January 1st, 2016, right? And so the previous cycle ended on month 86, and then this new one started. And so we've been declining since August of 2020, and we are now on month 82. And I just said 7-year cycle would be 84 months, 8-year would be 96. Also remember, the timing bands are not what you want to focus on, so it doesn't have to be exactly in that time, because you can see this was a really long cycle at 92 months, and also very bullish. We had a top at 85 months, so a very short decline. This was the most bullish cycle gold it ever had. And you had this other one at 96, this other one at 97, this other really long one at 102. So they can really kind of run the gamut. The point is that, like, you know, we've already gone through almost 7 years. Again, if you go back all the way back to 2016, take kind of a longer term view of it. And so now we just need to be patient for the decline to end and for the reversal to happen. Right now we have no sign of a reversal. The monthly candle is a big doji, which also tells us that the November candle is likely to open as an inside candle, like somewhere around here. And then maybe we don't get our conclusion until December. You know, obviously if it continues to be bearish, we could just make a new low outright. Or we could make a higher high up here before some kind of collapse. I keep talking about this on previous videos. This really direct move lower can't be sustained. We need higher highs kind of along the way, generally speaking. So I wouldn't be surprised to see a green month interspersed there before a deeper move lower. But at the same time, there's no reason why we can't bottom early and have a bottom on month 82 or in November, month 83. We have to be vigilant for that, but so far there are no signs of that. So let's switch over to silver, and then we'll look at GDX, and then we'll close out this video. So silver, also consolidating at the upper end of the range. In the case of silver, it's pretty clear it made a daily cycle low on day 31, which was October 14th. And so now this is day 8, which is actually also the same day that the S&P 500 is on. So it makes sense that that would correlate, silver being a risk asset or treated like a risk asset. And so silver is actually looking kind of bullish. You'd kind of want to, you want to hold this kind of hammer low at 1880. Which is not a coincidence. When you watch previous videos, you'll see that 1880 level was important before. And so it's not surprising. And again, I say zones, not levels. For silver, the weekly chart is a little bit more clear. So silver had a low on week 31 as well. And in the case of silver, that wasn't the same week as gold. It was the 31st week of this decline, but not the same exact week. And so silver then ran up and made this high on week 5. And then we've kind of declined. So kind of similar to how gold had that pullback. Very similar. You have a big red candle. Except in the case of silver, notice gold was consolidating at the lower end of the range for this last 2 weeks. Silver is more in like the middle now, right? And that $20.20 area, that's the high from that big bearish week. That's what we need to get above to get the party started. That tells you we're probably going to go test this high here. And we're probably going to try to, and then next would be this cluster of highs here. That's how we would recapture or like reestablish an uptrend. This yellow line, similar, just like gold, is your 200-week moving average. So we're clearly well below that. But again, these levels are very clear. And of course, you really want to hold that 1810 area. And on the monthly, you can notice silver is actually green, unlike gold. And silver actually had a green month last month, unlike gold, which has just been month after month of red. So in some ways, silver is already printing a lower high or a potential lower high. So that's going to be something to watch for. But we'll move on to GDX last, the gold miners, to kind of see how that's looking. So gold miners are actually starting to perk up here a little bit. So 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. So this is potentially day 21 of the daily cycle. Now this doesn't look so totally possible that this was an important low. So this is 7, 8, 9, 10, 11, 12, 13. So that's day 13. We'll just mark that. Just important. Again, I think of cycles as just a way to quickly characterize how long have we been trending higher, how long were we trending lower. So this tells me we rallied for 6 days, then we declined for 7 days. That's why this is day 13. And now 13 from 21. So we've rallied for about 8 days now. And we need to get out above this area here. And then that tells me we have a very good shot of testing the $26 area. So it's like a move above 24.40 could get us to 26. That wouldn't be a terrible risk reward, but again, if you would think the 8-year cycle low is still ahead of us for gold, that does mean we're on a longer term downtrend. So I definitely, certainly be careful here. And on the weekly chart, this is actually starting to take a little bit of shape here, right? So notice gold, silver, and GDX all on slightly different counts. In the case of GDX, week 35 appears to have been your ICL or your previous ICL. Then that next week we had this it was a big green week at one point, and then it completely failed. Big what do you call that? A shooting, like a shooting star. And then we had big bearish follow through that next week. Again, this is the same week that gold had the big bearish week, silver had the big bearish week. But look at the difference for GDX. The other two are consolidating either in the middle or at the lower end of the range. We are about to make a new weekly high above that, right? So that's really important. 24.62 is the breakout level for the miners. Now, it doesn't mean we're breaking out to new highs by any means. If you're inclined to take a sort of risky trade, a knife catch trade in the middle of this huge downtrend, this is the best shot you're going to get, I guess I would say. And again, that tells us we at least want to try to test this. Now, if we were able to break out above this, maybe even back test it from above, now that could tell us something about a potential trend change for a longer term. And similar to silver, this is your monthly chart. We actually did have a green month last month. Teased us, looked like it was setting up a swing low, and it could still come to pass. But right now we have a big doji of a month, really kind of frustrating trade in a way to make a move, then kind of give it all back, that kind of thing. So that's the lay of the land for gold, silver, precious metals in general. It's what you can say is that gold, the miners are outperforming gold, which is always a pretty bullish sign. We're making fresh highs on that daily chart. Now again, this is a little bit squirrely. If we're on day 21, that means we're getting late in the daily cycle. But maybe what we're going to do is come up here, test this, and then make a daily cycle low. So you at least have the trade to 26. You're going to need to be cautious there of a double top kind of situation, which would really be kind of like a triple top because we couldn't get through there here. I'll just zoom in here. This is what you call one of those island reversals, right? Notice gap here, gap there, just kind of left it behind. So this kind of level here around the 25, 50, 26, we've had trouble in the past. So you will want to be cautious. I think just in general, as I just said multiple times, precious metals are in long-term cycle decline. So you want to be careful with long trades. You want to be really cautious.